Hello, this one is not rehearsed, so bear with me as I try to do analysis off the cuff. First, before I go with my trade for tomorrow, perhaps the next day, which is this Starwood Hotels and Resorts, I want to go back to a trade I recommended a while ago. I said that JEF looked like it was about to go up, and the bias was somewhat bullish, but I made it a point to tell everyone that I am not too sure on this trade, and that we will only enter when we are absolutely positive that we know what direction it's going in. So, this is what happened. I recommended the trade on, let's see, I recommended the trade on May 10th, which was on this day. And I'll zoom in. I recommended the trade right there. The next day, it went down a few percent. The next day, it broke through the symmetrical triangle on light volume. The next day, it kept going through the symmetrical triangle on light volume. I like to see a little heavier volume, but if there isn't heavy volume, I'll take something else. I'm going to go to the first part of the triangle formation. I'm going to draw a line across it, and I'm going to check the low at this level here. And the absolute low of that day was 22.75. The absolute low of this day was 22.75. Obviously going to be a significant support level. So I am not shorting yet. But I will short once it breaks under 22.75. Because then after that, we can expect the price to go from, let's see, we use our measuring rule, the 1-year chart, give us a better idea. Measuring rule says it's going to go to about $20. So tomorrow or whatnot. Stop order. Let's do 22.69, and we're going to sell. So that's the first part. All right. Next trade. HOT. That's the symbols. Starwood Hotels and Resorts. I was taking a look at this one. I want to see what bias we had on the symmetrical triangle trade. Looks like it's down pretty much, because let's take a look. We have symmetrical triangle forming. Volume is getting slightly higher. Not as much as I like to see, but still going slightly higher. Fast stochastic going to put out a sell if there's one more down day. Money flow index, it's either stagnant or going down while the price is going up, which that's bearish. And then finally, in the relative strength index, the bottom thing, hold on a second, sorry. Actually, let's see if I can do something with this one. There you go, that one's actually kind of interesting. Right there we would have sold. We would have sold 2 days ago, according to that pattern formation. But anyway, relative strength index, sell signal, let's see, 1 day ago, yep. There would have been a sell signal last Thursday from the breakdown from these trend lines. So we have a couple of different things saying that, yeah, it's going to break to the downside. We have some bearish things going on. So anyway, back to the chart. I'll scrap these studies and stuff. What we're going to do, we are going to project our price target for right now at, let's see, can I draw any better of a trend line? It's a little bit better. So I'm going to be conservative. I'm going to go through the mid price between this high and this low, since they're a little too separated for me to have confidence in it. So you'll learn this as you get to trade enough. So we have a difference between $55 and $62.50 from top to bottom. Project that from the expected breakout point, which is going to be below $57.50. And we're expecting this stock to go to $50. So target $50. Sorry about the capitalized T. Next part. We're going to enter with a stop short sell at 57. Let's go with 57, just to be sure that things are working in our favor and we're not going to get whipsawed. 57.22, because 57.25 might also be a support point. Where's our stop order going to be? If it, let's see, we'll go to the 30-day chart, get a better idea of what's going on. If the price breaks above and closes above $58, we'll exit with a loss. So, actually, let's make it 50, yeah, $58. We'll exit with a loss. And that's only if it closes above that. And remember, since this is a short sell, everything is reverse. Okay, so our risk is going to be 58.80 minus 57.22. That would be in an ideal situation. So our risk is going to be 78 cents per share, which I'm going to put on the left-hand side of the graph. There we go. And our expected gain is going to be $7.22 a share. And unfortunately, symmetrical triangles breaking to the downside don't have a high probability. It's close to 50-50, so we're just going to do a standard risk to reward ratio, which will be 7.22 divided by 0.78, and that gives us a risk to reward ratio of 9.26. 9.26. Now, next part, I'm just going to go over this very briefly, the point and figure chart. One moment. Our point and figure chart is right there, and I'm going to adjust the chart to a percentage chart because there's a very large price range that this has gone through. And also, I just want to make a note, see this blue line right here? When those are broken in a point and figure chart, especially if they've been around for a long time, and this one has been intact since the price was below $18, when they are broken, it usually signals a major reversal. Let's go to the percentage chart so we get a better representation of high and low price comparison. And here we go. If you have to kind of use your imagination here, use this blue trend line here and draw somewhat of a trend line on the top. What does it look like? It looks like a triangle formation, a symmetrical triangle. But unlike the one on the actual stock chart, this one broke down yesterday. So this one already put out a sell signal. This is obviously a bearish trade. So that's what I would do. Get ready to short tomorrow with a stop short sell at $57.22. Our risk is 78 cents per share. Our expected gain is $7.22 per share. Hope it works out for us. If it doesn't, we'll get out with a small loss. Happy trading, my friends. If you have any questions, please feel free to ask.